Hi guys, welcome back to my channel again. So today we're going to talk about how to trade reversal when you are trading NQ. So reversal is quite a common setup among most of the SMC traders. Just because ICT 2022 mentorship, a lot of traders, when they study ICT, after they have studied ICT, they automatically becoming a reversal trader because 2022 model was I guess one of the most popular model among all of the ICT models that he taught. And the issue was the reversal model is that it's actually one of the most difficult model to trade when it comes to NQ. So there's actually quite a lot you need to understand before you can consistently to trade reversal to make profit out of it, right? And I want to talk about that because before I was trading futures, when I was trading with FTMO, when I was max funded, when I was able to pull out more than 100k payout from them, I was predominantly a reversal trader where I was trading currencies, and I was actually trading on a higher time frame, but time is fractal. Like the same concept does apply to NQ. The reason I don't trade reversal as often when I transition into the futures is because I noted that NQ tends to trend a much higher into the single direction when it comes to compared to the currency. It's a lot easier to trade reversal when it comes to currency, but when it comes to NQ, most of the time you want to stay away from trading reversal. But there are definitely times that I have traded NQs reversal throughout learning session. So that's why I just want to come out and talk about how I trade it, because the way that I trade, and there's one small understanding that I have, is something that not a lot of people has talked about on the YouTube. So I just want to come out and share that. So when it comes to trading reversal, I'm just going to quickly do the framework here. So the way that a lot of people understand reversal setup is there are only pretty much two things that what a lot of people look at, right? So when people trade reversal, the only things that they pay attention to is, so I'm just going to move it here. One is the liquidity level, right? And this is the mistake that I used to make as well when I was a fairly new trader. So they will look at a liquidity level, let's say this is a previous day low, right? And then they will look at an entry signal, okay? So let's just say in here, this is in this level, this is a FEG, right? So, okay, I'm gonna just, okay, so the mistake a lot of people do is they just only pay attention to two things, just the liquidity level and the entry signal for the setup, which is nothing wrong with those two, I guess, signals. But the most important things, single most important thing that you need to understand when it comes to trading reversal is you have to understand the market momentum. So what I mean by that is specifically, I'm going to use NQ in this example, but in the future video, I might talk about how I trade Forex when it comes to reversal, and then how I was able to make a lot of payout from trading Forex. But when it comes to trading NQ specifically, right, you need to look at if this was a previous day low and if this was a liquidity level, you need to look at the momentum move, right? This particular move that came down, that took out the liquidity from previous day. And if this particular move is very impulsive, and I wouldn't say impulsive, if it's very consistent and it has moved down, let's say between 250 points to 300 points throughout learning session, right? If this move has already created 200 to 300 points throughout the London session, right? This is quite a strong momentum move. And even it takes out this important liquidity level, you do not want to be associated with a reversal setup straight away, okay? My rule is that if I see within the same session, if this move has generated after the London Open, and if it moved to 300 points and took out the liquidity, I will not be looking to reversal setup until the next session, because it is extremely rare. If you don't believe me, you can go back and back test it. It's extremely rare that throughout the London session, you're going to have a 200-300 points move onto the both direction at the same time within the same session, okay? Generally, the opposite move will happen the next session, because the London liquidity generally only has 200-300 points. Yes, sometimes it will have those V-shaped a reversal move throughout the London, but it is extremely rare. Okay, so one of the things that I look at when I trade reversal straight away is me to understanding this move. If this move happened after the London Open and it was a 200-point move, I don't care how important this level is, that this liquidity level is. I do not care about this. I would just wait for the market to take out this liquidity and actually consolidate a lot of liquidity in this area. And I wanted to see the price to actually hang around in this area for a while, at least 1 or 2 hours, to just keep going up and down to gather and take out liquidity, to build up a lot of liquidity before I would actually wanted to consider a reversal setup. And that's very important to understand, because a lot of people, when they talk about it, the only two things: previous day low and then just another entry signal. Yeah, which is, if you're just purely doing that, your win rate for the reversal setup is going to be extremely low. Okay, so yeah, just understand it. If it's 200-300 point move already happened throughout the London session, do not take reversal setup. Let it build the liquidity for a while here, because if you take an entry here, what's going to happen is, yes, market is going to react from this level because it is an important level. But what it does is, even though it reacted to that level, right, because there is a buying order sitting here, it's just not going to have enough buyers within the same session. The reactive move that's happening here is only just because of the sitting buyers in the book that's already rested there, that when the market taps into it, it just creates this reaction move. And the reality is, throughout this session, you don't actually have enough buyers to keep pushing with that particular move to keep going up. That doesn't happen. So you will have this reaction move, and what happen afterward is price is going to come back, probably test this inefficient area, and because of the algorithm, how the market maker model algorithm is sort of programmed trigger, market probably gets react by this 5-minute fair value gap area, and the market probably keep going up because of the inefficiency gap. It's already in fill, and a lot of people just like, all right, that's it, that market has already given me enough signal. But the problem is, this reaction move is only the reaction move from the inefficiency. This reaction move is the reaction move from taking out the liquidity. Market does not have, in the same section, enough buyers to actually wanted to push the price to the opposite direction. You need to let the market to cool down in this area for quite a while, at least an hour or 2 hour time, to build liquidity on both sides. And then once it has gathered enough liquidity, then market will probably decide to go up to the opposite direction. And this is very important to understand. This is more important to understand, more important than actually just looking at the entry signal and then just liquidity level. Okay, so that's one thing you need to look at. And second way is, second pattern, I guess, is that the time that I would consider to take a reversal setup very early is in a period that, let's say, if this was a London Open, right, and then let's say before the London Open that came and took out this liquidity, if the price has already kind of consolidated in this area, if the price has already been doing this, okay, if the price has already been consolidating, there is no clear momentum towards either direction, price is already very indecisive. In that situation, right after the London Open, if the price came out and took out the liquidity level, only in then I would definitely consider to think about taking the trade. I will not looking for the market to build liquidity again in this level, because it's already building a liquidity, and then throughout the London Open it has taken out the major liquidity level, and then there is a higher chance the market actually potentially could go towarding to the opposite direction, because at this point market does not have a clear momentum to any single direction. The only thing it has is it's built liquidity, took out one major level, and if it creates an impulsive move to the opposite side, in that scenario, yes, there is a high chances the market is just going to shoot off to the opposite side without building further liquidity. So only in those scenarios that I would consider that right after the liquidity is taken, probably the first fair value gap for the 5 minutes time frame, I might just consider taking an entry, right? So this is really important to understand. If you're only just looking at the liquidity level, and if you're only looking at just right after the liquidity level, just another entry signal, your win rate for the reversal setup is going to be very low. So I just want to sort of explain that. This is how I trade reversal when it comes to NQ. So yeah, let me know if you guys have any questions, and leave it in the comment, and I'll try my best to get back to you guys.